Hello, everyone. Welcome to the Brainless Investor YouTube channel. Today's topic will be public versus private companies. So let's look into the difference between public and private company. A private company is usually owned by its founders, management, and a group of private investors. A private company information about its operation and financial performance isn't available to public. A public company has sold a portion of itself to the public via the initial public offering, or known as IPO. A public company usually trades on a public stock exchange after the IPO. For example, New York Stock Exchange, Kuala Lumpur, stock exchange. So they'll be, trading there once they finish their IPO. And the main advantage is the public company have over private company is the ability to tap to the financial market for its capital by selling stocks or equities and bonds in terms of debt. Let's look at the table below to better understand the difference between public and private companies. So for public companies, shares are owned by general public and institutional investor. So it's listed on New York Stock Exchange, Kuala Lumpur Stock Exchange, Nikkei, and so on. It's heavily regulated. It must follow strict disclosures, such as publishing its financial reports. Um, Access to capital is way much easier. They can raise money by selling shares to the public. Examples of public companies are Apple, Reliance's Industry, Amazon, Delta Airlines, and so on. It has a very high transparency. You can see the financials report, and you can see if there being any litigations. Are they getting sued, or do they have future prospect for the company? The control is diluted among shareholders, so they have votings, where the company wants to head, if they agree or disagree to acquire a company or to increase the directors' fees and so on. Whereas for private companies, the shares are privately held by individuals, families, or investors. It is not available on the stock exchange, so it has fewer regulations and it requires less disclosure. um, they have very hard access to capital. They must rely on public fundings, loans, and internal profits. So, example, SpaceX, Cargill's, and it has a very low transparency, right? The financial is private. They don't publish it to everyone, so only the people in the share ownership of the private company will see it. We as a public people, we can't see it. So control is tightly controlled by founders or small group. So for an example of public and private company, I have chosen Tesla and SpaceX. So public company, for example, Tesla, ownership is public shareholder, including institutional investor and individual. Stock exchange is listed on NASDAQ under the ticker symbol of TSLA. Regulation, it must file quarterly report with the Security of Exchange and Commissions and disclose any major events. Raising capital, raise money by issuing new shares, for example, IPOs and follow-on offerings. Transparency, you can see Tesla financial report everywhere. If you have stock exchange, brokerage and all, you can see it. Control, for example, Elon Musk is the major shareholder, but must be answered to the board of directors and shareholders on the company's questions or directions. So, for example, private company SpaceX, the ownership is privately owned by Elon Musk, employees, and some other private investor. So it is not listed in the stock exchange such as NASDAQ, NYSE, and so on. The share is privately held and traded only amongst those private deals. Regulation, so no obligation to disclose financials publicly, much less regulated, as we mentioned earlier. Raise of capital, they have to raise money through private funding, such as Series A, Bs, and Cs. Transparency, SpaceX financials details are most likely secret unless secretly shared. So control, Elon Musk maintain tight control over SpaceX decision because majority of this private stocks for the SpaceX is owned by him. We hope you enjoyed our video today on the comparison between public and private company. If you liked this video, please leave a thumbs up and subscribe to our YouTube channel.